Let us recollect. When a firm is dissolved, what are the accounts we prepare? Dissolution. We prepare which account? The realization account, and we transfer what? Assets, we transfer. Liabilities. When assets are realized, we put what? By bank. When liabilities are paid by the firm, to bank. Then when assets are taken over by partners, by partners capital. When liabilities are paid by a partner, to partners capital, like that we put, and we close which account? Realization account. Then we prepare which account? Capital account to record all this capital reserves, etc. and all. Then finally what? Cash or bank account we prepare to check whether that amount paid is equal or not, or correct or not. Any surplus is left, whether we have done problem correctly or not, we check through which account? Cash or which account? Bank account. The same concept we are going to apply in case of a sale of a firm to a company. Okay, we are going to sell the firm to a company. Now the company will pay us purchase consideration. For the business taken over, the company will pay what? Purchase consideration. Why the company takes over business? They want to grow business, or they want to expand business. So the company takes over business, thereafter that goodwill can be enhanced, and you want to increase the size of the business with a huge capital. Okay. Now the company will pay the purchase consideration to the firm. In which form the purchase consideration will be given? Let's assume you are all partners of the firm. You are all partners of the firm. The purchase consideration can be given in shares, where partners will become shareholders. Partners will be allotted what? Shares by the company. So far you are a partner. Hereafter you will become what? Shareholders of the company. Or the purchase consideration can be given in the form of debentures. Debentures are like loan documents. Or it can be in the form of preference share capital. Or it can be given in what? Cash. Clear. Depending upon the agreement. It all depends on what? Agreement. So this is what we are going to see extra or learn extra. Otherwise, let us assume you are having 35 assets and 10 liabilities. You are having 35 assets and what? 10 liabilities. Whether all assets and liabilities will be taken over by the company? Whether all assets and liabilities will be taken over by the company? No, need not. Let's assume the company takes over only 10 assets. Only how many assets? 10 assets and 4 liabilities. 10 assets are worth 20 crores. 4 liabilities are worth 4 crores. What is the net money payable to you? 16 crores will be paid as purchase consideration. Will be paid as what? Purchase consideration. But how many assets you are having? 25 assets and 12 liabilities you are having. Sir, what about the balance assets? Out of 25 assets, okay, some assets like stock, debtors, or some investments and all is not taken over by the company. Out of the liabilities, creditors, etc. and all, they are not taking over. What the firm should do? Very simple. Sell the remaining assets. Sell the remaining assets and pay the remaining liabilities. Pay the remaining liabilities. So very simple. In case of dissolution or in case of sale of a firm also, we are going to follow which concept? Dissolution. Which means we are going to prepare which account? Realization account, partners capital account, and which account? Cash account. Otherwise, concept of dissolution is 100% applied here. There is no change. There is no change. Prepare realization account, partners capital account, and which account? Cash account. There is no change. Then what is the change, or what is the difference? 2 entries will be extra. 2 entries will be extra. We are going to get which one? Purchase consideration. For this we have to pass separate entry. For this we have to pass what? Separate entry. Start. Sale of a firm to a company, below that. The firm is dissolved. The firm is dissolved. Title is sale of a firm to a company. The firm is dissolved. Full stop. Realization account, capital account, and the cash account are prepared. Realization account, capital account, and what? Cash account are prepared. Realization account, cash account, and capital account are prepared. Okay, the same as what? Dissolution. Okay, full stop. The following additional adjustments are made. The following additional adjustments are made. The following additional adjustments are made. Number 1, for purchase consideration due. What do you mean by purchase consideration? For taking over your assets and liabilities, the company should pay the money. For purchase consideration due, what entry we have to pass? Due entry. It is a due entry, not a receipt entry. Purchasing company account debtor. Purchasing company account debtor. 2. We are not going to get now. It is only a due entry. Assets or liabilities are there in which account now? To realization account. Because already it is transferred to account. So to realization account. Purchasing company account debtor to which account? Realization account. Next, for purchase consideration received. Debit what comes in? It can be cash or bank account debtor if it is paid in cash. Or it can be shares or debentures in purchasing company. Shares or debentures in purchasing company account debtor. Whatever you collect, you debit it to credit the giver. Who's the giver? To purchasing company account. Of course, this cash or bank will go to which account? Cash account. Whatever you collect, that will go to which account? Cash account. And whatever is paid by partner, whatever is paid by partner, it will go to which account? Very simple, it will be shared by partners. Whatever is received in the form of shares or debentures or bonds, etc., it will be what? Shared by partners. How they will share it, that will be specified in the problem. Okay, partners might take up the shares in profit sharing ratio, all those things. Cash or bank will go to cash account. And the shares, debentures, etc. will be shared by what? Partners as per their agreement. Only 2 adjustments extra. Sale of a firm to a company, only what? These 2 entries extra. Other than that, everything is going to be what? Same. We'll see. Some JLP policy adjustment will be there, or take it as any other asset. Take it as what? Any other asset. Anu and Sonu are partners sharing profits and losses in which ratio? 2:1. Their balance sheet is given to us. Anu's capital, Sonu's capital is given. Then current accounts are given. Anu 40,000, Sonu minus 23,000. It is minus 23,000. So it is a negative balance. Loan from Sonu is given. Creditors for goods are given. Fixed assets, motor cars, stock, debtors, bills receivable, bank. Advertisement suspense. Advertisement suspense, it will be transferred to which account? Partners capital account. It will be transferred to partners capital account. This we learnt at the time of dissolution itself. They decided to dissolve the business and accepted the offer from which company? Nanak and company. They acquire stock and fixed assets. Excluding what? 2 motor cars. Please remember, the company is not taking over all assets. They will acquire stocks and what? Fixed assets at a price of what? 3,35,000. I told you assets and liabilities will be taken over by the company. But in this problem, they are taking over only, the company is purchasing only how many assets? 2 assets. Which asset? Stock, fixed assets excluding what? Motor car is taken over. Then, what is the next one? Debtors realized 97,000. All these things are by the firm. All these things are by the firm. Debtors realized means who realized it? Firm realized it. Bills receivable realized 24,000 means the firm got the money for this. Creditors for goods allowed a discount of what? 5% means balance the firm has to settle. Purchase consideration is discharged. How much of cash payment? 83,000 cash payment. 8,000 preference shares of 10 each. 8,000 preference shares of 10 each valued for 9 rupees. Balanced by what? Some shares of 10 rupees each, like that it is given. So they tell you how the purchase consideration is settled. And the partners agreed the following. Anu will take over motor car for 25,000 and Sonu will take over the other car for what? 15,000. Sonu will take over preference shares for the loan given by her. Look at the liability side. What is the loan from Sonu? What is the loan from Sonu? 63,000. For this loan, what happens? Sonu will take over what? Preference shares for the loan given by her, and the balance will be taken over by what? Anu. Then ordinary shares means equity shares. Ordinary shares means what? Equity shares are taken over by Anu and Sonu in the proportion of their fixed capital. The balance will be settled in what? Cash. Prepare necessary accounts to close the books of the firm. I request you to go through them once again. Go through the balance sheet as well as the adjustments once again, then we can solve. The company is not purchasing all assets from us. Go through the balance sheet for a glance, then adjustments once again, then we'll start solving. What is the purchase consideration? 3,35,000 is the purchase consideration. In that, 83,000 is paid in cash. They are giving preference shares to us and they are giving equity shares also to us. But preference share value is specified to us 9 rupees each. For the company it may be a discount or otherwise. For us the value is 9 rupees each. Go through the adjustments also. Anu will take over preference share for the loan given. Balance is taken over by Sonu. Ordinary shares are taken over by Anu and Sonu in proportion of their capital. Balance is settled in what? Cash. Go through the purchase consideration part now. 3,35,000. Look at the purchase consideration given, 3,35,000. How this is paid? In the form of cash, 83,000. In the form of preference shares, 8,000 shares agreed a valuation of what? 9 rupees. 8,000 into 9 how much? 72,000. $3,35,000 minus 83,000 minus 72,000 will give you the balance. Face value is only a nominal value. When the face value of share is 10 rupees, whether the market value will be 10 rupees. It can be more or what? It can be less. For example, you take Reliance Industries share, face value is 10 rupees, sold for 1,400 rupees. Reliance Communication, face value is, that is Anil Ambani's company. Reliance Communication, if you look at face value is 10 rupees, sold for 3.5 yesterday. Okay, so the value of the share depends on what? Performance of the company. Okay, some shares are having a face value of 1 rupee, but the values may be what? 1 lakh or 2 lakh also. Face value 1 rupee, it is sold in the market for 14,000, 15,000 like that. So, there shall be difference. Now what is the balance? Put 3,35,000 minus 83 minus 72. What is the balance? 1 lakh? 1,80,000 is the balance. Sir, in the problem they have given some number of shares and all. How many shares are given? Look at how many equity shares? 9,000 equity shares into face value is how much? 10 rupee. 9,000 into face value. What is the face value total? 90,000 is the face value. It is not relevant. It is not relevant. What is the market value of the share? 1,80,000. This is like 9,000 shares. Market value was like 20 rupees. So only the value matters. In accounting, the cost and value matters and not number of shares, number of books, number of units. Are you going to record units or are you going to record value? Value. Okay. So this is the thing. Listen, look at the entry we passed. What is the first entry for purchase consideration? Purchasing company account data to realization account. What is the purchasing company name in this problem? Nanak and Company Limited account data to realization. What is the purchase consideration? 3,35,000. Then we are getting the consideration. What is the entry for getting the consideration? Cash account data. How much we are getting? 83,000. Preference shares in Nanak Limited account data. How much? 72,000. Equity shares. Equity shares in Nanak Limited account data how much? 1,80,000 to Nanak and Company or Nanak Limited account. 3,35,000. In the adjustment it is given, okay, how the preference shares are distributed and how the equity shares are distributed and all is given. We'll come to that later. We'll come to that later. Now take up these two adjustments and we'll proceed. So in case of a sale of a firm, always you have to make these two adjustments. All other things are same like what? Dissolution. Listen, which account first? Then capital account of partners. Who are the partners? Anu and Sonu. Cash or bank account next. Pay attention for next 10 minutes. Please pay attention. This purchase consideration adjustment, we'll come to it. As usual, let us continue with transfer of assets. We'll transfer assets. In the exam, please don't do this. You can use sundry assets here. What is the total of assets? Minus what and all you cannot transfer? Bank how much? Advertisement expenditure? Don't transfer that. Balance you can transfer. How much? To sundry assets 3,35,000. This advertisement suspense will go to capital account of partners. Advertisement expenses. What is the profit sharing ratio? 2:1. So 10,000, 5,000. 10,000 and 5,000. Cash or bank account, it will come as to balance brought down. To balance brought down how much? 20,000. Cash or bank, to balance brought down 20,000. Then, what are the liabilities you transfer? Creditors how much? 1,10,000. Then, any other specific reserve? Like investment fluctuation reserve, workman compensation fund, any other liability like partners, wife's loan, and any other liability, bills payable, nothing. Then Partner's loan will go to partner's capital account. By balance brought down. What is partner's capital? 1 lakh for Anu, 80,000 for Sonu. Then, by current account, Anu has a positive balance. How much? 40,000. But Sonu has a negative balance. Then, by loan account of partner, which partner? Sonu, how much? 63,000. Loan of Sonu, 63,000. Any reserves given? Any general reserve? P&L account? Any resource and surplus? If it is there, you have to transfer to what? Partner's capital account. Then, pay attention. Now, I request you to listen for 2-3 minutes, then you can continue. How this entry will be posted? How this first entry will be posted? Unlimited account data to which account? Realization account. Unlimited account data to realization account. It will come as in the realization account by which account? Unlimited account. This is for the purchase consideration due. How much? 3,35,000. Now, how we receive this? 83,000 in cash. That will go to which account? Cash account. Cash account data to Unlimited. Cash account data to Unlimited. The purchase consideration received how much? 83,000. Then, this preference share, look at adjustment number C. Go through adjustment number C. B. It is taken over by Sonu for loan given by her. Sonu has given a loan. How much? Sonu. Balance is taken over by Anu. Balance is taken over by what? Anu. What is the balance? 9,000. Balance is taken over by Anu, 9,000. So, to preference shares in Unlimited, Sonu will take over for how much? 63,000. Balance 9,000 is taken over by what? Anu. Clear? Capital account data to preference shares in Unlimited. 9,000, 63,000. Then, what about equity shares? Equity shares are split in fixed capital ratio. Look at last but one adjustment. What is given? Ordinary shares received is taken over by Anu and Sonu in the fixed capital ratio. What is Anu's capital and Sonu's capital? 1,80,000. Amount is also same. Ratio as well as amount is same. Clear? You need to take a ratio. Total share value is what? 1,80,000. Ratio also 1 lakh is to 80,000. 1 lakh is to what? 80,000. You can take it. So in which capital it will come? To equity shares. Equity shares in which company? Unlimited. Anu how much? 1 lakh. Sonu how much? 80,000. Once again, purchase consideration received in cash goes to which account? Cash account. Preference shares are taken up by Anu and Sonu. Equity shares are taken up by what? Anu and Sonu in which ratio? Fixed capital ratio. Now, all the other adjustments are going to be as usual like our normal dissolution. By bank, for any asset realized by the firm, we will put what? By partner's capital for any asset taken over by the partner. Likewise, any liability paid by the firm, we will put what? Realization account data to bank account. Anything paid by partner, realization account data to what? Partner's capital account. Look at the paragraph after that. Purchase consideration 3,35,000. After that, what is given? Debtors realized. How much? 97,000. Then bills receivable realized 24,000. Then creditors are paid at a discount of 5%. 1,10,000 minus 5%. 1,04,500. 1,04,500 we are paying to creditors. Then what else? Anything taken over by the partner? Anu take over car. Adjustment number A. Anu taken over car for how much? 25,000. Sonu take over the other car. This is for the car taken over. How much? 15,000. You can mention in the outer column itself. Anu's capital, Sonu's capital, 25,000 and what? 15,000. This is for the car taken over. Then, any other asset realized? Check the problem. Any other asset realized or expenses to be paid? That's all. Wait. Where this will come? By partners capital, Anu and Sonu, where this will come? Capital account, to realization. This is for the car taken over. How much? 25,000 and what? 15,000. Then, total this 97 plus 24. 1,21,000. To bank only one payment, 1,04,500. Where this will come? Cash account. To realization. How much is realized? 1,21,000. By realization. What is the payment made to creditors? 1,04,500. 1,04,500. Then, as usual, we have to tally which account? Realization account. Tally the realization account and tell me the balance. This profit will be transferred to whom? Anu and Sonu. 1,66,500. 2:1 ratio. 1,11,000. 55,500. Take up the realization account, then we'll go to capital account, cash account, we'll verify. Post this profit in capital account. What is the profit? 1,66,500. How to post this? Shall I proceed? Over. By realization account. What is the profit? 1,11,000 and what? 55,500. Then close capital account also. The balance will be paid in cash. You could have understood or should have understood. Normal dissolution and this one differs only for two entries. What is it? Purchase consideration due and receipt of purchase consideration. Please note all these small things. This to realization is for the car taken over. To realization is for the car taken over. This by realization is for what? Profit. This is loan from Sonu, 63,000. To cash or bank, tell me the amount. How much? 1 lakh? 7,000. 1,07,000. The other one? 12,500. If you place this in the cash account, it should tally. Preference shares are taken over first for loan, then for the other one. Balance is taken over by Anu. Equity shares are taken in fixed capital ratio. Then we record that profit and realization and car taken over. The balance is paid in cash or bank. Cash or bank account. By Anu's capital, how much is paid? 1 lakh. By Sonu's capital, total 2 lakh. First, to N Limited is purchase consideration. This is nothing but assets realized. This by realization is liability settled. That is there in the realization account. This is nothing but the purchase consideration that we got in cash. Next, after this, please go through the next problem. It is which problem? NJV. NJV are partners sharing profits and losses in which ratio? 1 by 2, 1 by 3, 1 by 6. If you make out a ratio, it will come in 3:2:1. 1 by 2, 1 by 3, 1 by 6. So it will be 3:2:1 ratio. We are given capital account of NJV, general reserve, investment fluctuation reserve, Veera's loan, Mrs. Nanda's loan, creditors for trade, creditors for expenses, bills payable and what? Bank OD. Various liabilities are given. Of course, assets are given. Look at the last three assets. Cash, Veera's current account, then what? P&L account. That should not be transferred to what? Realization. Cash, Veera's current account and P&L account. Then, partners decide to convert their firm into a company. For this purpose, new company is formed with an authorized capital. Authorized capital doesn't matter for us. Read further. The business is sold. Look at point number A. Motor car, furniture, investment, loose tools, debtors and cash are not to be taken over. In the assets they have specified what is not taken over, which means these assets will be sold by the firm. These will be what? Sold by the firm. Liabilities for which one? Bills payable, bank OD are to be taken over by the firm. See, in the asset they have told what is not taken over. In liability, what is taken, what they have taken over is given. The purchase price is paid, how much? 1,95,000 payable, 75,000 in cash, balance in shares. Simple, not like last problem. 95, 1,95,500 and 70, and that 75,500 is paid in cash, balance in shares. The remaining liabilities are disposed by the firm. Investments are taken over by Nanda. Debtors realized 20,000. Motor car, furniture, loose tools fetched 24,400. Nanda agrees to pay his wife's loan. Then creditors were paid at what? 74,000 for final settlement of claims. Creditors for expenses are paid in full. Realization expense amounted to what? All these things will come as what? Realization account, by cash to cash, like that. For asset realized, you will put what? By cash or bank. For liabilities paid, you will put what? To cash or bank. Look at the last line, that is most important also. Equity shares received from vendor company. Vendor company means purchasing company. Ought to be divided amongst what? Partners in which ratio? Profit sharing ratio. So in this problem, they are going to share the equity shares in which ratio? Profit sharing ratio. So everything is clearly given in the problem. What is the purchase consideration? 1,95,500. How much in cash? 75,500 in cash. Balance in what? Shares. Let us start with what we have done in the last class, our last problem. Okay. Which one is the first one? Purchase consideration. Start. Adjustment or entries for purchase consideration. Adjustment or entry for purchase consideration. What is the entry you will pass? Purchasing consideration, that is purchase company account debtor, NJV limited account debtor to realization. You can do it along with me, don't wait. NJV limited account debtor to realization account, how much? 1,95,500. How are we getting this? In which form? Cash account debtor, how much? 75,500. Equity shares. Equity shares in NJV limited account debtor, how much? Balance 1,20,000 to NJV limited account. 1,95,500. Start. Which account next? After this, start realization account, capital account, cash or bank account. Realization account will take extra space compared to the last problem. Leave around 15 lines plus gap. At least 15 lines will be required for realization account because we have got many liabilities. Capital account, compared to the last problem, it will take about 2-3 lines extra. Who are the partners? Realization account, capital account, then which account? Cash or bank account. Realization account data to sundry assets. In the exam, if you write sundry assets, no mark will be given. Ensure that you are debiting the assets separately. What is the total of asset? 4 lakhs. Minus 12,000 minus What is this 12,000? What is 56,000? Current account. Then cash. Eliminated. Balance you can transfer. Goodwill also will be transferred. Don't transfer rule is applicable only for what? Cash, current account and what? Losses. Then P&L account will be transferred to what? Partners capital account to P&L account, which ratio? 3:2:1. Come to capital account to P&L account 3:2:1. How much it is? 6,000, 4,000, 2,000. To current account, Veera's current account will be transferred to capital account. How much? 50? 56,000. Bank balance will be to balance brought down. I hope this we are doing it as normal dissolution only. Okay, 7th or 8th problem, we are doing it like a normal dissolution. Current account, we'll come to general reserve. Wait, to P&L account to current account. Then first let us close assets and let us go to liability side. Cash or bank to balance brought down 1,000. Then be fast. What are the liabilities you will transfer? From the end, let us go back. What is the next? What is the last item? Bank OD. How much? 60,000. Then bills payable. Bank OD 60,000. Bills payable 14,000. Then creditors for expenses 20,000. Then creditors for goods 76,000. Then Mrs. Nanda's loan, wife's loan will come. How much? How much? 15,000. Any other liability? Specific reserve? Workman compensation fund, investment fluctuation fund, like that? Next. What will go to capital account? Capital account by balance brought down. How much? 70,000, 80,000, 10,000. Then by Veera's loan, which loan? Okay, general reserve, how much? 3:2:1 ratio. 9,000, 6,000, 3,000. Transfer general reserve in profit sharing ratio. Then by Veera's loan, how much? How much? 33,000. Then any other thing like P&L account? No. Reserve fund? Nothing. P&L account is there? That is there in debit side. Assets. So it's a loss. To P&L already we have done 3:2:1 ratio. Now, before we put that realization of cash, all those things, let us record the purchase consideration. How this will be posted? How this realization will be posted? In the realization account, it will come as by NJV Limited account. For purchase consideration, how much? 195,500. How are we getting this cash? How much of cash is received? That will go to cash account, to NJV Limited account. How much? 75,500. Purchase consideration received in cash will go to cash account. What about shares? Shares are taken up by partners in, look at the last line of the problem, profit sharing ratio. Cash goes to cash account, of course. Come to capital account. To shares in NJV Limited. It is clearly mentioned it is taken over by the partners in profit sharing ratio 3:2:1. How much? 60,000, 40,000, 20,000. Clearly mentioned to take over at profit sharing ratio. Other than this, it is normal dissolution only. By cash or bank for asset realized by the firm, to cash or bank for the liabilities paid by the firm. Look at the last but one paragraph. There is a lengthy paragraph given. What are the assets realized? Read one by one. It's given clearly. Nanda took over investment, debtors realized, other asset realized. Nanda also agrees to pay his wife's loan. Creditors are paid in final settlement. Creditors of expense are paid. Then realization expenses are much? 500, like that, it is clearly mentioned. Based on this, we are going to record that amount realized and what? Paid. By N's capital account, this is for which taken over by Nanda? Which asset was taken over by Nanda? Investment. By N's capital account for the investment taken over. What is the value of investment taken over? 13,000. Then by cash or bank for the asset realized. What are the assets realized? Debtors realized how much? 20,000. What are the other assets? Motor car. Then furniture 4,000. Then tools 1,000. What are the liabilities to be paid? To N's capital. This is for the wife's loan paid. What are the other liabilities to be paid? Creditors are paid in full settlement 74,000. Creditors for expenses, it is given paid in full. What is creditors for expenses? 20,000. Then realization expenses 500. Once again, I repeat. For any asset realized by the firm, by cash or bank, anything taken over by the partner by partner's capital account, anything paid by the partner to partner's capital account, paid by the firm, it will come as what? To cash or bank. Realization account data to cash or bank. What is the amount paid? 74,000 plus 20,000 plus 500. What is the amount paid? 94,500. Listen, before doing this, I asked you to check one thing. Before doing this payment of liabilities and closing realization account, please check one thing. Listen, pay attention. Ensure that all liabilities are settled. All liabilities are what? Settled. What about bank OD? Look at the adjustment number 2. Adjustment number 2. It is taken over by the company. Second page, adjustment number B. Paranga. What is given? Liability for bills payable and which one? Bank OD are taken over by the company. Liability for bills payable and bank OD is taken by the company. Whether you have to pay it? No, it is taken over by the company. The company will take care of paying it. Then, what about creditors for expenses? That is paid. Creditors for expenses are paid in full. Other creditors are also paid. Mrs. Nanda's loan taken over by what? His husband. So, liabilities are paid. Liabilities are what? Paid. Like this, you have to cross check before closing the account. Suppose if a liability was not paid, you have to pay it. What about investment fluctuation fund? It is not a liability, it is a specific reserve. You need not pay to anyone. Ensure this is done, then record the closing. How much is total amount? 94,500. Now close realization account. What is the profit or loss? What is the profit? Three is to 2 is to 1 ratio. Three is to 2 is to 1 ratio. How much? 3,000, 2,000, 1,000. And in the capital account, don't forget to enter this amount. This investment taken over and what? Wife's loan settled. Please enter that amount, then you can record that profit. In the capital account, by realization for the wife's loan. What is the wife's loan paid? What is the wife's loan paid? 15,000. To realization for the asset taken over. What is the investment taken over? 13,000. This is for investment taken over. This is for paying what? Wife's loan. By realization. Why this by realization? For profit. What is the profit? 3,000, 2,000 and 1,000. Tally this, you will get cash or bank balancing for that. It can be by cash also. If there is a shortage, partner should contribute. Only in case of insolvency that loss and all should be shared, otherwise to cash by cash. What is the balance? To cash or bank, how much is paid? How much? 18,000, 44,000, of course, this will be recorded in cash account. $18,000, 44,000 and what? 31,000. To realization, what is the cash realized? Assets. Credit side la parunga, realization account credit side. By realization for liability settled. 94. Then to N's capital, sorry, V's capital. We collect 31,000. By N's capital, $18,000 and what? 44,000. With this, the second concept gets over, dissolution of firm. Please remember, dissolution of firm, next one, which one? Insolvency of a partner, piecemeal distribution, even sale of a firm to a company. This is part 2 of partnership. Part 1 is admission, retirement, death of a partner. What do we do there? We prepare revaluation account, adjustment for goodwill, old ratio, new ratio, sacrificing, gaining and all we see. We prepare capital account and we prepare what? Balance sheet. That is part 1. Till death of a partner, it is part 1 of partnership. After death of a partner, what we started? Dissolution of firm. Dissolution of firm. Standard 3 ledger accounts. Realization account, capital account and what? Cash account we prepare. Dissolution can be asked with insolvency. If a partner becomes insolvent, that should be borne by what? Solvent partners in profit sharing ratio or capital ratio? Capital ratio. Piecemeal distribution we have done. Maximum loss method and which method? Proportionate capital method. Then it can be which one? Sale of a firm to a company. What is left out in partnership is amalgamation of firms. Amalgamation of firms, it will take a very lesser time to learn. Listen, in case of amalgamation of firm, are we dissolving business or going to continue business? Continue business. How to do it? Very simple. In the books of old firm, you will transfer the capital to new firm account. How to do it, we will see in the next session. Homework.